On Wednesday, during the Asian session, spot gold stabilized at a low level and rebounded weekly after the sharp plunge in the previous trading days, showing an overall pattern of low-level oscillating recovery with weak upward momentum. In terms of core drivers, the high operation of the US dollar and U.S. bond yields, as well as the fading expectations for Federal Reserve interest rate cuts, have continuously restricted the rebound of gold prices. At the same time, the continuous escalation of the Middle East conflict and unresolved inflation concerns have led to safe haven demand and bottom fishing funds providing support for gold prices. Under the game between long and short sides, the short-term trend is unclear. From a fundamental perspective, the U.S. 10-year Treasury yield remained at a high level of 4.059%, and the U.S. dollar index, although slightly pulled back, still stayed around the high level of 98.99, suppressing gold prices. The Middle East conflict has spread to neighboring countries, and the market is worried about its long-termization, so safe haven funds have not completely withdrawn. Global central banks may turn to a more hawkish stance, and interest rate cutting expectations have weakened, further restricting the rebound. But the market generally believes that this pullback is likely to be temporary. Technical analysis: gold prices have fallen below the short-term and medium-term moving averages and are in a weak recovery stage after a high-level pullback. The RSI has rebounded from the oversold zone to the 35 to 40 range. The green bars of MACD have contracted after the death cross, and the KDJ has formed a golden cross in the oversold zone, but has not broken through the 50 line, showing indicator divergence. The daily Bollinger Bands have narrowed. Gold prices are oscillating below the middle band $5180 and the lower band $5080 provide support, with the overall trend leaning weak. Key support and resistance levels: support levels $5080, $5000. Resistance levels $5180, $5200, $5260. In summary, gold prices are in a short-term weak recovery, with upward movement constrained by the US dollar and interest rate cutting expectations, and downward movement supported by geopolitical risks. Going forward, focusing on the $5080 support and the $5180, $5200 resistance, and track the Middle East situation, US dollar, and U.S. bond trends. Analysts remind that it is not advisable to blindly bottom fish in the short term, and it is necessary to control positions and operate based on key levels. All content is for reference only and does not constitute investment advice. If you trade based on this information, you are responsible for your own profits and losses. Please subscribe, like, and share. Thank you for watching.